Hello everyone, my name's Dean, let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is March 12th, 2025, and this may be the biggest show I've ever done. Okay? And I'm going to tell you why. Today we're going to talk about what Bitcoin's likely to do in the immediate short term. And if this plays out, what effect that will have on altcoins. We're also going to talk about why, despite a bearish macroeconomic environment, difficulties in the financial markets worldwide, why, according to the charts, crypto will be okay. But you can't say the same for traditional financial markets, and we're going to actually look at that, okay? A lot of times people conflate the traditional financial markets with cryptocurrency and their performance in crypto, saying, well, if traditional financial markets are bad, well, then we can't expect crypto to counteract or to outperform the traditional financial markets, because a lot of people believe that crypto pretty much just follows traditional financial markets. Wrong. And this is why we do this chart stuff. If you look carefully, both crypto and traditional financial markets follow the US dollar currency index. So whatever the US dollar currency index does, then you should expect inverse, because they're inversely correlated, an inverse correlation and inverse reaction in crypto and in stocks. But this is why it's important to look at charts as well. Stocks are not looking promising. We're going to look at all that. So guys, without any further ado, let's get started with Bitcoin. Bitcoin is about to put in the final move to the upside before a massive move to the downside. At least this is what I'm seeing on the charts, okay? So, really small time frame, hourly time frame. I spy a bullish reversal pattern, okay? And these are important because when you're looking for a reversal of any kind, look for this. Inverse head and shoulders, quintessential bullish reversal pattern. Some way, somehow, price action loves to form some version of this pattern. When the price was going one way and it wants to go back up, you're going to see this pattern. If you spy that pattern, you can expect a move up. And look, this inverse head and shoulders, if you wanted to count it a la Elliott wave AB base theory, you say one pair, two pairs, three pairs of AB basing. So basically, you're putting in your accumulation pattern. There you go. So you can look at it in terms of Wyckoff. You can look at it in terms of Elliott wave. You can look at it in terms of pattern analysis. And all three ways give you the same result. The Wyckoff accumulation is basically just slanted, so it's hard to see. It's not really straight, right? The Elliott wave, 2 degrees of AB basing and a pivot, or 3 pairs of AB basing, and then just looking at it as a straight up pattern analysis, inverse head and shoulders. The target is typically the height of the head superimposed from the site of breakout. So again, we have more confluence to say Bitcoin's breaking out and hitting our upside target, which is around 94.3, okay? And once that's hit, we shouldn't expect any further upside from Bitcoin before a massive drawdown. This is very important. This is one of the reasons I said this is one of the most important shows I've ever done, because I don't know how many people are expecting this. So if you're on social media, on crypto Twitter, you may see, or you may have recently seen, many people saying the bull market hasn't started yet. That's like a popular thing that's going around now. It's popular to say that. People have come to this conclusion in the recent past. You'll know if you watch this channel, we've been saying that for 5 months, 6 months, half a year now. The bull market has yet to start. What we've seen from 16 to 100K has been a corrective uptrend. And we expect one final move down, a large move down to the 65 to 70K region before the bull market actually starts. We've been saying that for some time. So the bull market hasn't started yet is part of it. But more precisely, we should expect a massive move to the downside to hit that target. Remember what the higher time frame analysis is, okay? The higher time frame analysis is important because it's based off of that we're saying one more hit to the upside to 94.3 before a massive drawdown. And it's also based off of that why we're saying altcoins are going to do what they're going to do as Bitcoin hits that target. So stay tuned for that because that's equally as important, if not more important. So again, remember this red channel that you see, this red rectangle is 100 plus days of price action. That's what we call in Wyckoff analysis our distribution channel. That was broken down, okay? And once we broke down from that, we knew with a high degree of probability that we were going to have to come back up to the bottom of the channel because that's channel trading 101. That's our fundamental sort of chart analysis, right? If you break a channel, the way to break it to the downside, first you have to retest the midline. Midline retest, check. Breakdown from the midline. Now, the second and final retest has to be the bottom of the channel. Once that's executed, then you can properly break down from the channel. The other part of this is some people are probably saying, Dean, are you blind? We just hit the bottom of the channel right there. That's why we're going down. Wrong. That's not it. Two things on that. One, if this is correct, that we're probably putting in an ABC zigzag, that C wave is going to be quick. It's going to be strong. It's going to be uninterrupted downwards price action and like nothing but red. That's all you're going to see. It's not going to be slow like this. Okay, that's one. Two, corrective patterns play out in flavors of three. This is something we learned from Elliott wave analysis. All corrective patterns, ABCs, WXYs, WXYXZs, they play out in flavors of three, okay? And here we get the flavor of three, zooming in, right here in this B wave. A, B, C. We're putting in that C wave, that final move up. Let's break it down even further. Look, this is your first A wave. This B wave is compounded like so. And now you're getting the C wave. All right. So that's the flavor of three. And it looks like you're coming back to the scene of the crime. Hey, is it really over with this 100+ day channel? Yes. And yes. Okay. The other part of this, and something that is important to note is, look, we talk about extremities being rounded. Tops rounded. Right there you see a parabolic resistance of 100+ days, right? This is exactly where we would hit if we played out this inverse head and shoulders. This is exactly where we would hit at the 100+ day parabolic resistance that Bitcoin's been under. Once that hits and confirms, then we fly down to our target of 65 to 70K. Again, the reason I put such a large margin between 65 and 70K is because it's going to be quite volatile. So I expect, based off of the analysis done in, months ago, that 65 should be the low, and it should hit somewhere between 65 to 70K with a strong buyout, right? So basically, once it comes down into the region, buyers step in quite intensively, and then we start getting on the small time frames our consolidation, but it's going to be a strong buy up of that, and that's when effectively you get the start of the bull market. So that's Bitcoin, and so far our many months long read of this price action is actually playing out. Did it play out exactly how we said it? No. But the high time frame analysis has been exactly this. You do your distribution channel, and eventually your distribution channel breaks down and targets that target of 65 to 70K. This is what we've been saying for months. You can't say exactly the same thing. So you go into the weeds, you go on the small time frame, you start looking at, okay, how is this going to play out? How is that going to play out? Here's a target on the small time frame. Sometimes it's hit, sometimes it's missed. It doesn't matter. On the high time frame, if you made your plan to take profit for Bitcoin in this region, you did a great job. Or even anywhere in this region, you did a great job because you knew it was coming back down. Okay? So that's basically Bitcoin. Now, the time, because Bitcoin is the king crypto. Whatever it does, everything's going to follow suit in some way, shape, or form. So as Bitcoin makes its way up to this final resistance, this final test, that's the only opportunity altcoins have to also make their move up, okay? Because when Bitcoin comes down here, everything's going to come down. So altcoins basically have this one last chance to get the hell out of the way. So that's why I've been saying for quite some time, I'm expecting altcoins to make a run. And that run would essentially and effectively move them off of their support level that they've been in or on for the past 100 plus days, right? Because as Bitcoin's been in a distribution for 100 plus days, altcoins have been doing this retest. This retest of a very important bullish reversal pattern for 100 plus days, the same amount of time. So it's kind of like they're going in opposite directions. Bitcoin's preparing to break down, altcoins are preparing to break up and out. Okay, so this is the analysis on the altcoin space. You have your inverse head and shoulders bullish reversal pattern. That's 1,000 days in the making. Then you have this confirmed. The breakout confirms the pattern. The breakout and retest rather confirms the pattern. You always have to have the breakout and retest, because if you get something like this, that's a swing failure pattern, then that nullifies, that invalidates the pattern that you thought was breaking out. But once it breaks out and it retests, then you know it's a go. And the retest has held, meaning you came up and down, you found a lot of buyers right at the neckline of your 1,000-day inverse head and shoulders. Again, you see that inverse head and shoulders bullish reversal pattern at any major reversal. This is a high time frame, daily, weekly. You can see that on the small time frames. We just looked at Bitcoin on the hourly. We saw the same thing, the same idea. It's all fractal. So on February 2nd, we had that confirmation with really strong buyout or buy up of the price on altcoins at the neckline. And then subsequent to that, we see a series of tests and retests of this neckline. Okay? Thus far, based off of that price action, it's really likely, and it's quite responsible to say that this is some sort of mini accumulation channel. And what you should expect is a break up and out of this mini accumulation channel. The next target, the next logical resistance of this breakout is all the way at the top of this 500-day channel that you see in green right here. Okay? And this is a simple move. So there's only one move that altcoins are putting in while Bitcoin goes to its target of 94.3 and makes its final retest of resistance. That single move in altcoins is the following. It's a move up and out of this 40 plus day resistance, okay, 40 plus day accumulation channel since February 2nd, and then retesting the top of that 40 plus day accumulation channel as support. because it's been resistance for 40 plus days. You got to break out of it and retest it as support. Okay, so that's the idea. Altcoins come all the way up here, get all the way out of the way. Bitcoin then decides, okay, now I have to finally retest 65 to 70K. And altcoins are like, okay, that's fine. We're out of the way. Go ahead and make that retest. We'll also retest the top of our 40 plus day channel. And there you go. Bitcoin goes down 30%. Altcoins in aggregate go down 35%. Works well, everybody wins. Okay, so that's the idea. That's the one trade. And that trade in particular is called the disbelief rally. If you don't know what I'm talking about when I make a reference to that term, look up the Psychology of the Market Wall Street cheat sheet. Psychology of the Market Wall Street cheat sheet, and look up the disbelief rally. The disbelief rally is essentially the first rally out of the bear market accumulation, when a lot of market participants think, okay, it's never going to change. There's no impetus for any positive price action. It's always going to be down and sideways. And they don't see it. And they don't believe it because up until now, it's been years of sideways and down. So like a change in market structure completely, like, you know, diametrically from down, sideways to up is different. And if you're not reading it in the charts, why would you believe it if you haven't seen it? That's why it's called the disbelief rally. We're seeing a disbelief rally on the total 3. And remember, the total 3 is all the cryptocurrency assets minus Bitcoin, minus Ethereum. It's representative of a large swath of the altcoin space. This is indicating 100% move, more or less, from the bottom of this channel up to the top. 100% move. If in aggregate you're getting about 100% move, which is a 2x, in the aggregate total 3 chart, you're expecting something like 2, 3, 4, 5, 6x from some lower market cap altcoins, right? Anywhere from the same thing, 100%, to 5, 6, 7, 800%. Who knows? So we're expecting a major move in altcoins, and it should be one move. That single move up and out of support levels. And then once Bitcoin decides it's ready time to go down, they go down and retest the top of this 40 plus day channel. That's the simple read. And this is all based off of the larger analysis that Bitcoin's going to go down to 65 to 70K. It's not going to pump past 94.3 thereabouts. And altcoins are on support. They're on 1,100 days, 1,100 day support, right? Because you have 1,000 days of support here, and then you have 100 days of support there. So this neckline is 1,100 days. We're currently on it. It's unlikely, very unlikely. Nothing's impossible. It's super unlikely that we break down from here. It's more likely than not that we break up from here, hit the next logical resistance, which is the top of this 500-day channel, which is about 100% away. That's the read on altcoins. So we have Bitcoin. We have altcoins. I'm going to end the video talking about traditional markets. I don't typically do this, but I think it's important. Again, as I said in the beginning, many people think whatever the traditional markets do, crypto follows. And it's lazy. Maybe they heard it somewhere, they've read it somewhere, and why not? Sure, it makes sense. Traditional markets birthed, the whole market, industry. So why wouldn't they lead cryptocurrency? And it makes sense, right? The traditional markets are so big, cryptocurrency is just a fraction in terms of market cap of traditional markets. So why not? But again, think for yourselves. Do your own research. Both the traditional markets and cryptocurrency follow the US dollar currency index, insofar as risk on assets trade inversely to what the US dollar currency index does. So if the US dollar is tanking, which it has been based off of, the US administration, the current administration, and all the risk and uncertainty in the economy, the the American economy, it makes sense that risk on assets also go up, not down, up. But here, this chart shows you something different. I've always said to my friends who trade traditional markets, be very careful. This chart, and I've looked at this chart now for the first time in years, but I don't look at it often because I don't trade traditional assets. But it hasn't changed since the last time I looked at it, which was maybe a year ago. This chart is, the best way I can say it, the best word is it's on a cliff. It's on the edge. It's iffy. It's shaky. It's not very confidence inspiring. Okay, why am I saying that? Well, you have this dashed line that's pretty much your resistance, and it's been resistance since 2010. Okay, so 15 years right now, you've been pretty much just playing at resistance, retesting resistance over and over and over again. When I look at this chart, it looks artificially pumped. It looks artificially sort of held up. It doesn't make much sense to me because most charts, once you play with resistance enough, you finally retrace and then you capture liquidity, then you go. It's unnatural how much we've put in what we would categorize in, technical analysis as a rising wedge. This is a rising wedge. This is a 15-year rising wedge. Am I saying that the market's going to crash all the way down here? I don't know. But best case scenario, you get a repeat of what you got here. Because this chart is overheated. It's as overheated as I've ever seen a chart. And so the idea that the current administration's policies have caused this crash, you can say, sure, it's a precipitating effect, but it's pretty much been at the edge. It's like a candle, a lit candle on a windowsill where the windows open on a windy day. It's like eventually you know what's going to happen. It's like, a person that is about to jump and you tell them they're not worth anything and you keep yelling it to them and you're saying, yeah, just go ahead. The world would be a better place without you. That's all that's going on now. It is so ready to come down, and it has been for quite some time. And here, so you saw the 15-year analysis, the 15-year sort of rising wedge. But here, what do you see? You see basically a rounding out. And what's even more tenuous, what's even more sort of not confidence inspiring is that since this move right here in 21, you've actually moved away from the resistance. So here you hit resistance, you kind of off it. Here you hit resistance again, kind of off it. It looks like you're finally saying, okay, I'm going to round out. Let's look on the smaller time frames on the daily. I hope you get what this looks like. I don't know exactly how to explain it so well. The chart speaks so loudly, it's hard to articulate just how risky these investments are, how risky this chart is, thinking it's going to go up. Can it go up more? Sure, but not in the way you think. If anything, it's bound by that 15-year resistance, and don't be surprised if you get a rollover and another move down here. This is why I drew that out. So all I'm seeing in the traditional markets, and this is, by the way, I failed to mention, I'd be remiss if I didn't, This is using the S&P 500. I use the S&P as a proxy for all traditional markets given its long history. NASDAQ and the Dow, they're fine, but the history's so short, you can't really do serious long-term analysis with the NASDAQ and the Dow. Here on the S&P, you have good data, and you can see patterns very well. So I'm not seeing that this, just looking at this, ever since 2022, is necessarily continuing to the upside. And if it does, it's going to be in a nasty, choppy, non-impulsive way. The healthiest thing for this chart, for this market, if I had to look at it, I didn't know what it was. There's no label on it. I would say the healthiest thing for it is to correct down here at the very least. I'd say actually the most healthy thing would be for this to correct this 15-year rising wedge like this and just breathe. This market is unbalanced, and it has yet, I mean, that would be the healthiest thing right there. The market's not balanced. It looks fake to me. It doesn't look natural. I look at charts till my eyes cross. I've looked at charts for the, sometimes 18 hours, 19 hours a day for years. There's nothing natural about this. It is artificially propped. That's my conclusion in looking at this. Is I don't do technical analysis on traditional markets for a living, nor do I do it for fun. But just looking at this, it is glaring, and it's shocking how fake this market looks. That's the best I can say. Okay? So at the very least, I'm saying don't be surprised if you get a retracement here in this way, down to this level. And don't be surprised if it comes even further down. So traditional markets don't look good using the S&P as a proxy, despite the US dollar coming down and going down as we think it should. And I'm just going to look at the US dollar really quickly because I've referenced it. And if you're not familiar with this chart, you may not know what I'm talking about. But the US dollar also has been sort of planning. It's been planning. It's been likely to retrace down to this level, and this is also analysis I did years ago. Okay, this is very clear right here, and so we knew that this move down in the U.S. dollar would move the risk on assets, especially Bitcoin and cryptocurrency. That's our bull market right there, coming back down. U.S. dollar coming back down to this support. And the beautiful thing I love, and I'm going to end the video with this because I don't want it to be too long. The beautiful thing I love about technical analysis is I did this analysis years ago. I had no idea who was going to be in office. I had no idea. But there's something about good analysis that mixes well with fundamental macro events. It's like a crystal ball, but you never know how. You know the what? I could tell you years ago that the dollar was going to correct down here to this base of this, multi-year wedge, right? Look at this. I mean, this is, anybody who watches my channel, who has been watching my channel for years knows this is not new. I've put this in a long time ago, and you can see this channel is since 2009. So what is that? That's like a 15-year channel, 16-year channel. You go up and down the channel with obvious sort of, it goes without saying that you're eventually going to hit support again, and that's the dollar coming down to this level. If the dollar comes down to this level, we expect the risk on assets to move up in kind. That's our Bitcoin bull market. We've seen that for quite some time. That's finally happening. But even though that's happening, I would not put my money necessarily in the traditional markets because they don't look good. So that is all I wanted to say. Hope this was helpful. If this was useful, like, share, and subscribe. If you got value, consider buying me a coffee. i.e. tipping me by Venmo, Cash App, sending me Litecoin, and do consider my crypto portfolio mentorship and consultation service. I think I got it right finally. Also at the pinned comment below, you can join. I meet with you once every month for 1 to 2 hours, and I go over, help you balance your portfolio, and I go over targets for the assets that are likely to make sustained gains in this coming bull market. So guys, take care, and I'll see you next time.
Could turn back, repeat the same story, or march forward and embrace change and reflect upon his glory. I'm a selfish man, therein lies the whole problem. Torn between my actions and the will of my heart. I had to take it all apart to see where I stood as a man, to depart from this world and leave it in his hands. Come on.
And it looks like I'm heading for the gold, y'all. Touring on a pothole road, y'all. I get it even if I didn't fit in, winning right up to the end, and like I didn't even know, y'all. I have pop's genetics, working hard never to get it, like shit or better than letting life get the best of my efforts. Instead I dedicated to bettering my steps, measuring investments, watch me do it to the death, y'all. Run it.